All right, there we go. That works. That works. We should be good now. I had some stuff muted. We are good. All right. Let's get back to it. Good evening, everybody. Welcome to Slow Markets. I'm Coach Dakota, Coach DBA. As always, there is our Topstep risk disclosure in the YouTube chat. This is not a signals class. Everything we say is for educational purposes only. Now, let's get to it. Before we go through everything, let's just get to what the itinerary is. We're going to be going through the rapid fire, NASDAQ, crude oil, Nikkei, and then we'll finish it off with gold, 8 p.m. Central Standard Time. We see a spike in volatility around 8 p.m. In gold, and we're looking for a trade there. And then we'll do some Q&A and start talking about the 100-tick chart and maybe some trading strategies. And there in the YouTube chat, and I'm going to pin it to the top of the chat, is the Topstep Discord, and that's my channel. Near the end of class, we're going to be reviewing some statistics. And if you want me to review your statistics, as always, just copy and paste your statistics there in that Discord. Man, what a day in the market again. We finally got that pullback. We got that sell-off. What an interesting thing. I wish I had Coach Jay on here. I wish I did, because if you guys remember what we were talking about last night, where we could make a possible run to test or break 20,000 and then immediately start to sell off. And then if we do get that pullback or what we were looking for, of course, we never expect anything so far, so violent, so fast. We were kind of looking at this area of support and resistance that we've seen. Now it's a zone. It's a little bit difficult to tell on the daily chart. As we zoom into the hourly chart, we'll be able to see that a lot better. And yeah, very, very bearish type pattern here. We've had this huge rally up. We had a little bit of consolidation, if you dare say this is consolidation. And then we just sold off. And now what we're going to be looking for is two things, right? We have two things that I have in my mind now that the market's starting to get a pullback. The question is, do we sell off even deeper? Maybe we go back down into, do we go back towards 19,000? And then do we have a recovery, right? So the question that I'm asking myself, and you guys should ask yourself as well, is what's next, right? Where is this market going? Is this a pullback in a bullish market? And are we going to see a continuation to make a run at all-time highs? Do we go down and do we start looking for a higher low, whether it's really much deeper, or is it fair to say that we even get maybe that was the pullback, right? Maybe that was the pullback for a higher low. I mean, that's a pretty weak pullback, to be honest. And then we have that continuation up and to the right. And what I like to do, and everybody probably knows this as well, is maybe we take a look. What are some of these pullbacks that we typically have been seeing in this bullish run? And maybe that could be a decent judge about how deep we could pull back. Immediately, the first thing I'm observing is, that was 3 days. This was 3 days. That was, maybe 2-3 days. And then we take something like that and we say, okay, if we do have a pullback, about where could we go, right? Is it fair to assess this type of a market condition to the market condition we've been experiencing? I don't know. I don't know. Maybe not, but maybe this is giving us more room to the downside, maybe 19,400 if we do get there. And then we look for a bounce and run higher. Let's take a look at the hourly chart. And yeah, the first thing I'm noticing, we did sell off into this level, right? We sold off to where we started that rally, basically right there. Like that was a level we sold off. We touched 19,530s, right where we started this rally. The question is, are we going to see a continuation? Maybe we see a continuation down here to this level, around 350s, 19350s. For me, we're at an interesting area. Do we look for a pullback and then a continuation? I'm not sure. Some of the technical patterns that I'm seeing right now is, was this a double top and then we just broke through and then we got that confirmation to the downside? And so, I'm just going through a lot of theoreticals. These are questions that I ask myself. This is, things that we could be seeing in the market from the technical standpoint where, now are we getting a pullback? Immediately the first thing I'm seeing is, do we get a pullback to this level? 19,000, basically 600, 680. And then we see a continuation down, like a shoulder head shoulder pattern that might form. Or do we see a deeper pullback all the way up to, 19,780s and then a continuation down? Like you can see there's so many different scenarios that can happen that we could see that could, play out. It's almost unlimited, right? Or was this the pullback and then we just, maybe consolidate here for a little bit and then immediately recover and go back? We always have news. It's hard to, that's part of trading, right? If we knew what would happen to the market, trading would be a lot easier. Yeah, I think that's all I have on the NASDAQ, to be honest. We're getting that pullback. I want to be looking. I'm a bullish trader. I'm a bull. I'm wearing red. I've been looking for this sell-off, this pullback, and now the question is, where do we buy this? I was looking for the sell-off up here. We got it. And now the question is, where do we buy it? We have Jackson Hole tomorrow. We have a lot of news coming out tomorrow. We'll get to gold, guys. We'll get to gold. And it's just looking to buy this market. That's what I am going to be looking for. I'm going to be looking for areas of support, and I'm going to be looking for areas to buy it. Just caught that great gold trade. All right, I think circumstances change. We're looking at gold. I like what I'm seeing immediately. Gold is just rallying. No, it's fine. It's fine. If the markets are moving, this is slow markets. I was getting through NASDAQ, and I kind of really was done with NASDAQ. We'll touch base on the NASDAQ, but right now, gold's making the move, and the markets that are moving is most important. Look at this, right? This is something to be said. There's a lot of resistance right here at the 2950, or 2515s, the teens, and we're starting to break back out. And so, what? Is this the start of the leg? Is this the start to the move up, and to start making new highs? I mean, it's starting to look like it, right? Like we're starting to see that where we're breaking up, and maybe this could be the next leg up in gold. Man, it's looking bullish to me. The question now is, I don't want to chase this. I wouldn't recommend chasing it. What I would like to see is a higher low, right? It's hard to wait. It is hard to wait and be patient and look for that higher low, because I mean we get some hesitation, we get pullbacks. We do have that 8 p.m. Central open, or that 8 p.m. Central trade, in where we see a spike in volatility, but we're seeing a big bounce in volatility now. I mean, it's not that big, to be honest, guys. It was $3. It's not an extreme volatility. We might sell off. We might sell off and come back down and then look for an opportunity, but nothing too dramatic yet. The trade was probably a breakout trade of 22s, and then you'll be a lot better and a lot better, in terms of risk reward. But until now, it's just waiting. Waiting and being patient. Okay, let's get back to it. We'll finish up with gold. Remember, we have 17 minutes until 8 p.m. Central. So going back to the NASDAQ on the hourly. Like I said, we got that sell-off. We did place a trade last night. The slow markets trade was to short, if everybody remembered. We were looking to sell. I can't remember the price, but it was around like 30s, right? 930s. We was looking to sell the NASDAQ at the 930s. Last night, it did get triggered in at about 5 a.m. and immediately stopped out and then just tanked. Man, what unfortunate, like that's trading, right? Where sometimes it sucks. That's the risk about using a limit order rather than a stop order, right? We're getting in as the market's going against us rather than waiting. And if the market did start to sell off, then get in as we break down. But the idea, right? Bad timing, stop loss, right? Is the stop loss too tight? And there's so many things that we could review. But overall, looking to, looking to short gold. Someone says 944, 939. But the idea was that's what the setup was. We were looking to short the NASDAQ last night. And unfortunately, we just had a stop loss hit before we sold off 400 points because we was getting in at 930 and we sold off. I mean, that was a 400-point banger. That would have been amazing, just depending on how you get in. There was a lot of volatility overnight, to be honest. We did rally up quite a bit. We rallied. That was an interesting move. But I'm not seeing too much set up. We'll talk about this a little bit later on. But let's move on. Let's move on to crude oil. And we are starting to get a reversal. We did come down and touch 71. This is something now that I'm going to be paying attention to. Today, it looks like we rallied from, 71, 60. We rallied up into this area. We did break through this. And here's something that is interesting. We broke through. We pulled back. This was resistance. It's now becoming, this was support. And it's now becoming support again. I would not be opposed to buying this. I'm going to be setting up a slow markets trade tonight, and it's going to be on crude oil because what I'm looking at for crude oil is maybe we get a nice run down to like 72s, and then we grab some liquidity like crude oil likes to do, and then we make a nice rally up. So I see maybe a setup happening in crude oil, looking for a long, looking for a break up above, and maybe we could run up to $75 a barrel by the end of the day. So, this is looking really dang bullish to me, where we had that nice, turnaround. We had the reversal. We sold off. We're starting to find some buyers. And support is becoming support again. I like to see a run of liquidity like crude oil likes to do all the time. And then we have that continuation. So I'm liking crude longs now, finally. It doesn't mean that we can't just continue to sell off because we was looking at the 68s before, but maybe we do get a bigger pullback in crude or a bigger rally in crude. Now, really quick, touching base on the Nikkei, and then we can move on. Nikkei, we didn't really sell off like the NASDAQ did. We held up a lot better, and if anything, we had another buy the dip opportunity here in the Nikkei, right? Where, look at this. This is a beautiful support trend line. Every time we've came down, it's been beautiful opportunities. If you were trading this in the afternoon, maybe you were able to get into a long. I would like to see if we just can consolidate a little bit more on the Nikkei and then look for a reversal and a break up higher. Maybe we get a run to 39,000. Let's look to the left. Yeah, I could still see us getting back up here. Maybe make a run to 39,000. I'm a little bit more hesitant because NASDAQ sold off. It's nice to see that we didn't have that really ugly sell-off here on the Nikkei. I mean, 1.5%. I mean, it's still a sell-off. A sell-off is a sell-off, 1.5%. But it wasn't very ugly, right? We did hold up. Nikkei has CPI news tonight. So, yeah, maybe that's something to where we just stay away if there is news coming out. Now, let's go ahead and finish doing some analysis on gold and then prepare for maybe a gold trade tonight. And if you guys didn't notice, take a look at the top left-hand side. I have an F-It Friday Combine. F-It Friday Combine. That's what it is. That's what I'm in. I decided just to rename it. That's because that's how it feels like today. So yeah, immediately same analysis on gold. I'm actually seeing there was a lot of support here. Is support becoming resistance again? Right. This was support. Is it becoming resistance? I'm not sure. That's one thing that I'm immediately seeing in gold. Let's zoom in. Do we zoom in or do we zoom out? Let's take a look at the daily. Daily's looking pretty bullish, right? You can see here on the daily there was a lot of resistance here. We sold back. Resistance becomes support. So maybe we do get and we catch legs to the long side, and then I'm still got that 2600. It's just right there. Let's go ahead and take a look at the 5 minute. Adjusting the charts, we did get a little bit of a pullback there. The first area that I'd like to see is this 32 level. We have a 32 level, and then this is a little bit of a tough one. Yeah, 32 is a main level that I'm seeing. We had that pullback. We got up to 28, and we pulled back all the way down to 24. 10 more minutes. I think we're going to do the same thing again tonight. I think with gold, as we've been talking about gold, at 8 p.m. Central, we see a spike in volatility. And then once we get the initial move at 8 p.m., 10 minutes in, we're going to be looking for that reversal trade. So a reversal trade, 10 minutes in, from 8 p.m. So 8:10 p.m. Central Standard Time is about when we'll start looking for a reversal here in gold after an initial move, because we do see a spike in volatility right at 8 p.m. Central. Yes, and also everybody, please understand this. Good point, Armando, is to trade is not an option, or to trade is an option. Trading is optional. For me, tonight when I'm doing these examples, no, I'm placing a trade and we're doing this as an example because this is a class, right? But for you guys, 100% it is an optional. Now that being said, we going back to the original time. I'm not sure what you mean, John Fernandez. How do you maintain mental stability? Whew, that's the toughest question that anybody could ask, right? Is how do you maintain mental stability? I mean, that's one of the hardest things that we all struggle with, and we'll always struggle with that no matter where you're at in your trading career. I go through it. My trading buddy Rips goes through it. Everybody I know who trades, or even if it's not trading, if it's your normal job, maintaining your mental stability is pretty dang important, right? That's why I'm happy that Steenbarger was on Tuesday. If you missed it, go watch it. So many others. Let's go ahead. I'm going to look at some other markets while we're waiting. Let's see, because if there is a trade setup, I'm going to take it. Starting to sell off here in NASDAQ. We've went from 660. Oh wow, we're seeing the markets pick up a little bit faster. Not so slow of markets tonight. Let's go ahead and zoom in. I'm going to use a 100 tick chart. 100 tick chart. Ooh, that was a buy the dip. Was that a buy the dip right there? Was that another buy the dip opportunity tonight? I think it was. Let's see what we do. Let's see how we react around here. Now And we're still thinking about gold because it's not 8 p.m. yet. Remember, we're going to wait for the initial move from 8 p.m. We'll see. We'll see. We did bounce right off that, right? Dare I say we could even... Yeah, that's an interesting line. And it's right at this resistance. I'm not really much of a scalper during this session, but we are seeing volatility. And when there is volatility, there's opportunity, right? Yeah, I'm wanting to enter long here. I'm a bull trader. We got that pullback. I don't have a VWAP. All right, we'll watch and see if this will give us an opportunity. I'd love to see something like this again, right? There was a lot of chop, a lot of consolidation, and then we broke out. So let's see. Maybe, I mean, there's even an argument to be said we zoom in, readjust everything. Why is price looking so different now? Yeah, the 100 tick chart looks very different. Let's go back to the 100 tick chart. Whenever I change time frames, that drawing looks a little bit different, right? The 100 tick chart looks nice and clean. Nice and clean for the 100 tick. Let's see. Let's see if we could get into a long here. If it fails to the downside, someone's saying 40 points. No. I mean, yeah, if it fails to the downside, you could see where did we open up? I do like, sometimes I do like reversal trades. Let's take a look at the open, the 5 p.m. Central open. Where is that at? That was right. Where's that? Right there. So we opened up basically right there. And so sometimes what I like is a reversal trade and a return to where we opened up at 5 p.m. So that could be a play. We're already really close to it. To be honest, that play was most likely up here. Looking for a reversal. There was a lot of resistance up here. So a reversal into these higher 50s and make a run back towards where we opened at 5 p.m. It was more of a play that I liked. We're already back down here. And yeah, we might see a push down to where we opened up at 5 p.m. Central. And I'll keep going over the revert. I'll talk more about the 100 tick chart tonight before we go over statistics. But it's looking pretty heavy so far. We did get that pullback, bounce, and immediately selling. If we see more consolidation, I would be okay with maybe we try and get into a long here tonight. Also a pivot point there. 25. You're looking at gold. Has gold started moving yet? You know, I just watched. Oof. Let's see. Is there anything? Yeah, look. The open sure as heck held as support. Let's watch. I'm going to see if we could get a long trade here. We kind of just sold off, and now we are consolidating. There is something to be said that we're consolidating right here. This is a key. Looks like not major support or resistance, but it is support, and it has been buy the dip, right? Just buy every dip, buy the dip until it keeps dipping, and then you don't. 3 more minutes till 8 p.m. All right, I'm liking this. Let's see if we could get in it. Let's see if this will get me in. I like to do buy at bid. So there's the entry. You know, I need to set this up for ticks. I need to make sure I always do ticks. Let's go charts and data. We're going to go ticks, save, boom. So 77 ticks seems like a little bit too much. Profits would probably be... That is an upside down risk reward. The next question is, do we just risk this? 30 ticks. That's a better risk reward. That's closer to a 2-to-1. NASDAQ can be a bit choppy, so I do like a little bit of a wider stop loss. And then the question is, do we get into a second contract if we get down to this level? And the next question I ask myself is, if we do keep selling off, what would we consider failed? When would it would be considered a failed trade, right? So I do like we're holding up a little bit here. You can see it's really wicks. Like there's a lot of wicks. It's jumpy. It's slow markets. Could there also be a reason to add if we do start to break above? Possibly, yes. There's something to note that it is Friday, and I mean, hence in the name of this combine, right? Yeah, maybe we risk 26 ticks to make 54. That's a 2-to-1. That's a little bit better of a 2-to-1. I think that's more realistic. It's always scary during slow markets because it's so low volume. You can see this thing get whipsawed in any direction. So I usually prefer a wider stop loss. But having it down here at this next pivot just seems too much. 77 ticks to make 54. Unless I push my take profit higher, right? If I'm pushing my take profit higher for a 1-to-1 trade, that could work out. But then I feel like I'm just not trading the way that I like to trade. And that's quite the big move. And the more we're consolidating here, it is 8 p.m. and I'm going to switch to gold here in just a moment. But we are consolidating, and so I'm liking this a little bit more. Maybe even for an ad here. And then moving my stop loss to the 27, 26 tick mark a lot sooner. So let's watch this. We'll watch this and see how it plays out. I'm actually, we just keep buying up. Very, very low volume. This is low volume trading. It's definitely difficult to trade like this in a low volume market. I'm just going to watch this for a minute. And we still have 10 minutes till the gold reversal. What's gold doing? Everybody look and see. Yeah, we had that breakout, pullback. Maybe this is a bullish flag here in gold. And then do we have a break and continuation back up to those 32s? Not sure. We're going to play that reversal at 8:10. If there is one. Why not gold tonight? We're still talking. We're going to be talking and trading gold. This trade just barely set up, so this one's looking a little bit more attractive to me already, and we still have a little bit of time until that gold. So I'm going to go ahead and enter a second one. Oh, it's not going to let me enter a second one. So I'm going to cancel that, and we'll see if we can get this. We'll see it. Risking 20. Let's go 26 ticks now. We're at the bottom of that, and see if we could get a nice bounce, maybe a nice continuation. The immediate resistance I'm seeing is right there, right at 45. We'll see. We'll see if we could get to these 45s and run into resistance, and then we could make a judgment on that price action. Right there at 45. We got to 45 and a half. 45, trying to break through it. This is that resistance I'm seeing from a technical standpoint. I'm going to lower my take profit just a little bit, right there at these little points, right? You can see them on this resistance. That's why I was a little nervous of freak. That could have been the better take. That obviously was the better take profit. I said the 45s is take resistance. Let's see if we could go back up there. If we go back up there, then it's going to look a lot better. We still have 8 more minutes till I'll keep switching back to gold. This is more important. I'm in the middle of a trade, so stop to break even. No, not yet. For me, there's no reason to move my stop. Because if we go down, come back, it's a very choppy market, right? Just for me, right? That could be an option if you want to journal it and say, what would happen if I moved my stop to break even? Is it valid? Sure. It's just not the way that I personally trade. And as we watch and we wait. We'll see. Yeah, that 45, I think that should have been that. Could have been a lot better. It's just putting him with take profit there. But the risk reward was just a 1-to-1. Still not too bad. I like, we'll watch it and see. Maybe it gives us a point of interest to move my stop. It didn't give me an opportunity to get into a second contract. You know what? Let's watch it. We could spike. I'm just going to get out using a join ask. So sometimes we'll see a nice spike. I'm okay with keeping my take profit there. I'll just join ask. This is just going to be in case we see just for some reason a big bounce to the long side. Maybe I just eliminate my take profit and I'll try and get out at the ask if we get up there. Sometimes at night it could get really crazy. Let's see. Okay, I'm going to just get out. There we go. I'm liking that. Let's see if we could get it. Move it up a little bit. See if we could get that 47. There we go. All right. Now let's go ahead and go to gold. All right. Gold, we are now 8:04 p.m. Central. Let's see if we get a nice reversal. Oh, I'd love to see it sell off some. Yeah, I had to put someone in timeout immediately. Like I said, I'm warming up more and more to the way MP and the team's holding it, handling it during the day show, weeding out all the crap, right? Watching. Oh, let's see. Not really seeing much here in gold. We did get that initial movement right. Like this was 25 minutes before 8 p.m. And we're just right here. I would like to see us break in one direction or the other. I mean, it's coming up, and maybe that's something to be said. If we do not get a move, we just don't trade it. Weed out the undesirables. Yeah, I mean, there's no room for any negativity. There isn't. I've always been really convenient for traders, and that's what we are here for. That's at least what I'm here for. We're all adults. If it's constructive, sure. Bernie, you crossed the line some. Or you like there's some traders in here that just there's a fine line. Walking the line's okay. I don't mind it. I've not kicked anybody. I've never kicked anybody that I can remember. I've just timed them out for like 24 hours. I don't mind traders walking the line. Could you imagine all the crap that's went down on like the trading floor? Coach Jay says, I have. Yeah, there's a lot of people talking crap on the trading floor, I could imagine, and all the stuff that gets said, and fighting and punching and all those nasty things that you like Hogue and MP and Eddie could always tell. But like I said, we're all here to learn. I'm here to help traders, and ultimately, we're here to make money. And if I could get you guys in a funded account, let's do it. Like I said, this is not a signals class, but yeah, that was an exact, like, look, we go back to the NQ. That was the trade, right? We had that nice trade and that nice setup. We bought it low and we sold it high. I'm sure we could go through and do this little thingy, show the executions. You guys watch me do this live every single night, so I don't know what some traders are whining about. Yeah, right? That pretty dang solid trade. Now we could continue higher. How much of a bull I am. If I was able to get into two contracts, yes. One for take profit, maybe we should have just done that tonight instead of worried about gold, where we could do our journaling. We could make sure that our journaling's we could have one and we could trail it and see if we could get a nice break above this. And then maybe we could get a run to new high of the session and maybe start to push into these 70s. Maybe these 70s could be an option here. And then we do our fun little journaling here in the NASDAQ, which is looking pretty good to me for a break and a continuation. But that was a trade. Just about 9 points. Can't get upset with that. Better than a poke in the eye. Better than watching gold. Gold hasn't done anything. Right? Yeah, gold's just anticlimactic. Let's see. What is crude oil doing anything either? Is there nothing really. NQ is the only thing moving really so far, right? We're getting a breakout. Buy the dip. Close your eyes and buy. Like that's what it was. Beautiful. And if we can move back to, okay, now's the time. Let's talk about the 100 tick chart. Now that we're here, and we could continue to watch this thing break. It's looking so nice, right? Higher lows, higher highs, nice little pullback, area to buy. That was it. And I'm gonna get this off because bugs the heck out of me when I have that. So let's start talking about the 100 tick chart because I kind of used it. I've kind of used it a little bit. So 100 tick chart. If you guys don't know, I've been reviewing this every so often, and it's not a timed chart. So there is no such thing as time in this chart. Each candle is only based on how many transactions occurred. This is a 100 tick chart. So every 100 transactions is a candlestick. It's, to me, a lot cleaner. And this is something I wanted to point out. So 100 tick chart. This is a key example and why I love it. And feel free to ask me any questions as I go through this, because I'm going to go through this. We'll maybe talk about maybe some overnight slow markets trades, and then we'll jump into some trader statistics. And as I'm going through this, if you want to submit your statistics, there's the link in the YouTube chat. Go ahead and send me your statistics that way, and we'll review them. It's always better whenever, it's always fun when I have Coach Jay and we're reviewing statistics together, going back and forth. And so, once again, as I go through that, continue to ask me some of your guys' questions as we do that. Just going through. Okay, perfect. We're good. So 100 tick chart. No time, just price action. And I wanted to point this out. So if we take into consideration time, so let's say from there, that's not the right ones. Let's go ahead. I am going to plot out a timestamp, and we'll go through this together. And this is why I absolutely love it. And we're going to do two comparisons, okay? Two comparisons over maybe a 5-minute period. So let's prepare these vertical lines. It's an Alt-V. So Alt-V. Let's get used to that. So we're going to do right at the top of the hour. So right there. And we're going to do 5 minutes. So 5 minutes right there. Ooh, look at that. So that was 5 minutes. 1, 2, 3 candles. 1, 2, 3. So 5 minutes worth of data was right there. 1, 2, 3. 300 ticks, right? 100 ticks, 100 tick, 100 tick. So now we go ahead and let's plot another 5 minutes. Now this is during the Asian session where there's low volatility, low liquidity. The markets are very, very slow. So let's just do it. We're going to do this a couple times here in slow markets, and then we're going to jump over to some examples during fast markets, and you will be able to see the dramatic difference on this because a tick chart can be a great gauge of volatility as we start to watch it. So let's watch this maybe from what we started to see, let's say in this consolidation. So let's plot out another one. Let's find a nice round number. So right there. So that's one. Let's do 5 minutes. Actually, basically the same thing. 3 candlesticks is 5 minutes. Let's do one more. Let's do right here. This is a really, let's go from there, and we'll do even. So about 3 to 4 candles for every 5 minutes, right? 3 to 4 candles. And I'm sure I bet we could find one that covers like 1 candle in 5 minutes. Is that possible? I've seen it happen before where let's just take a look. I'm sure we could find it somewhere right here where it's like 1 candle is 5 minutes. This is going to be really close to 1. Let's see. We'll go from 50 to, nope. It's about 4 minutes. So every 3 to 4 candlesticks is 5 minutes here during the Asian session. And these are just completely random samples. 5 minutes, 3 candlesticks. Nothing to do with time. Just 100 ticks, 100 transactions for every candlestick. Now, if we're going to move to where we opened or where we closed during the New York session, this was the close of the New York session right at 2 p.m. So let's say 2 p.m., the last 5 minutes of the New York session. So let's do that. Right at 2 p.m. There's 2 p.m. Central. 3 p.m. Central. Sorry. The New York session closed right there. 5 minutes before. Let's do that. Look. 1 second, 1 second. Now it's turning into seconds. Look, 5 minutes. Let's find it. That was 1 minute. So that all of this was just 1 minute. Let's go. Let's find 5 minutes. Right there. So take a look at that difference. Look how dramatic of a difference this is. Okay. And I just want to stress, right? 3 candlesticks, 3 candlesticks, 4 candlesticks every 5 minutes. The last 5 minutes of the New York session, look how much went on in the last 5 minutes of the New York session. And then we could even mark it, right? When was the next 5 minutes? We could go ahead and go back to right there, right? Still, it's not as much, but there's still a lot of data. And then we could do it again and again and again. So let's do it. Watch. I want to show this because this is fun and this is important. And I love doing things like this. Take a look at, you could see the increase in volatility. Beautiful, right? Increase in volatility. And I'm going to just do this every 5 minutes for just a moment because this is a great example. So you could understand when volatility comes into the market, right? They're not going to be exactly the same every single time if I mark them out every 5 minutes. And I love watching this, just like how I explained the last time. And yeah, I know it's a little bit tedious for just a moment. You could see when there is increases in volatility, right? That 5 minutes was volatile. This one was less. This was volatile, less. And then let's go ahead and do the New York session open. And then I want to talk about it, and I want to talk a little bit more at why I love the 100 tick chart. Let me make sure I'm doing it on the right times. Okay, so the New York session open was basically way up here when we was right around 20,000. Right around 20,000. Okay, the New York session open started right at lots of candlesticks, right? New York session open, and the first 5 minutes of the New York session was right there. Oh, come on. And then I'm going to do a news event. We're going to do the news event. Come on. There you go. First 5 minutes after the New York session open and the 5 minutes before it opens. So we're going to do both. And I don't want to keep going over this. I think you guys will get the example. 5 minutes before, 5 minutes after. Lots of volatility, right? And then I'm going to do, let's see, what time was the news? Yeah, not much really happened on the news. Okay. Anyway, I think that's going to be good enough so I could show you and kind of give the point, and then we're going to do this side by side because I love the side by side comparison, right? So we did it every 5 minutes. Now I'm going to jump over to a 5-minute chart on the left, and bear with me. I know it looks ugly, but let's look at this 5-minute chart on the left. I want to make sure I have to make sure they're exactly the same. Okay, there's those 3 candles, and there we go. So I want to make sure that this is a great side-by-side comparison. So when you're trading, or when I am trading, and now I'll get to your questions in just a second. When I am trading, as you guys could imagine, it's hard to tell what happens, right? It's very, very difficult to tell what's going on in the New York session. We had that huge sell-off, but how can we tell when that sell-off occurred? Could we have been able to take advantage of it? We went up, we broke 20,000, and then we just completely sold off. And over here on the 5-minute chart, it was really difficult to tell because it was like 5 minutes, one after another. And then over here, in these 5-minute charts, there was a lot going on. There was a lot of data, like Google Maps. You're zoomed really far in, and you could start to see there was support and resistance we made up. And I'm going to go ahead and do this so we could see the 100 chart a little bit better. And there was a lot more data in here that could have gave us clues on getting into a short, right? So as we're going, and as we're watching this, there were some clues, right? When maybe we're starting to trend down, and you could probably start to see this a little bit better. And we're going to mark some technical analysis here. This is not prepared. This was not 100% prepared. And then we could see some of these trend lines, and then the break of the trend, we could see these higher lows. And there's a whole bunch more technical analysis that we could see on this 100 tick chart that it's very difficult to see that on this 5-minute charts. Yeah, I know there's a lot. There is a lot to this. This is why I don't like indicators, because you could easily mark up charts a lot, and that's it. So I think I did a decent job explaining that there's a lot of data that could happen within that 5-minute chart. So inside this candle, there is a lot of data that happens. Like there's so much. And then if we go to where we sold off, this really big, ugly sell-off, right? So let's take a look at this, because this is the next example I want to go over. We had that huge, nasty sell-off from basically 900 down to 680, and then a nice rally, and then we had a consolidation. And to me, this was the trade. This was the best trading opportunity there was during the New York session. Was the pullback in order to get in short to try and catch a move back down and catch the continuation. To me, this was the trade of the day, where we look for a pullback, wait for consolidation, and try and get in short. And it was clean too. There wasn't any whipsaws to the upside. There wasn't any crazy candles that just rallied up, ran stops, and then turned around. This was nice. This is very rare. This is very, very rare. A lot of times you'll see, look how messy candlesticks can get, right? There's a lot of ugly, messy chop, and getting in and getting out is very hard, because you put your stop, it goes up, it runs your stop, it turns around. Very similar. Like there was nothing. It was a beautiful consolidation and a breakdown. So it's very rare to see this, but when you do, it's nice to take advantage of it. So now this sell-off that we're seeing on the 5-minute chart, as you can see over here on the 100 tick chart, look at this. During the sell-off, it was nice, it was clean, and look, we had a move, and then we had a pullback. I'm going to just mark this as red, just so it's not, oh man, red. Okay, whatever. It just didn't do that. Oh, that's text. There you go. So during the sell-off, you could see it's a little bit cleaner, right? Where we could start to read price at. Oh, come on. There we go. And where was that? So anyway, so we could start to read price action a little bit better. And so when it comes in terms of trading, and we're going to watch this comparison on the 5-minute chart, is where do we enter a trade? On this 5-minute chart, it's very hard to enter the trade. However, you could see that it's very clear we're in a downtrend. Maybe we're trying to take a break. But over here on the the 100 tick chart, you can kind of see it a little bit better. Maybe there you could find better reasons to get into these trades. Look to get in short on a pullback. Look to take a breakout trade, whatever you want to do. But it's nice and it's a lot cleaner. You can see, and this could give us an options. If you remember how I like to do my trailing stop, maybe you trail a stop below this pivot, and then we break down. Then you trail your stop, below the next pivot, and then we sell off, and then we move our stop loss, and then you just continue to trail it. This is how I like to trail my stop losses, below the next pivot. Whether we're able to make the argument for down here or below this one, then maybe we get stopped out right here. And then when we get stopped out, that happens to be when we started to reverse. But look at this. This is what the main thing I wanted to point out. So over here on the 5-minute chart, we had that consolidation. Take a look at this. This is absolutely beautiful, where we don't see this very often. We rallied up. And look, this happens to be right there. Look how interesting this is. See this consolidation that we've seen before on our way down? We stopped, we consolidated there, and we sold off. When we rallied up, we just happened to stop at that same place, consolidated, but we consolidated a little bit wider, right around 810 to 830, and then we broke down again. But yeah, that's also something to pay attention to, right? This was support, and when we broke down, support became resistance. And so here we are again. Now, how could we have got into a short? Yeah, coincidence? I think not. But, famous words of Dobie, where when you see a channel like this, you could make an argument to maybe sell one contract at the top of the range, maybe get into another one as we reverse it near the top of the range, and then maybe sell the final one, if we start to break down on that range. And so as we start to zoom in, this is what I love. Now, I'm going to go ahead and just clear things up just a little bit, okay? Because I think you have that idea before. So as you start to zoom in, this is what I love. I love this. This is how I like to trade. How do you get into trades? Well, immediately we're looking for the market to reverse, start to break down. Maybe I add something like a support line, right? Like we're support. Maybe we start to break down through support. And guess what? Support starts to become resistance, right? This is a support line. We broke through that support line, and now we're starting to see that support line become a resistance line, right? That is something, maybe you could say that it's an even resistance. And once we see that even resistance, then we look for the short on the breakdown, right? You can see where we broke down. We went up just a little bit. We touched 807, and same thing. This was support. That support right here then became resistance, and then we broke down through this support and it sold off. All this is happening in the matter of like seconds, right? This is happening really, really, really fast. I also am watching the 5-minute chart alongside, and so you could imagine you can't see this stuff on a 5-minute chart. I could even argue you can't even see this stuff on a I just changed the whole thing. It's even relatively hard to see it on a 1-minute chart, right? This is a 1-minute chart, and you could also argue it's hard to see. It's harder to see on the 1-minute chart. But now remember, I love to use the 5-minute chart as main areas of support and resistance and the overall trade setup. But this 100 tick chart, I love to use it as support and resistance. Now, once I get in my position, right, say we get into a short somewhere in here, and now we do the same thing with the stop loss, right? Say our stop loss is up here, and we want to trail it. Well, trail it the same way. I love it. especially in a trending market, right? We move our stop loss below the resistance or above the resistance, and as we start to sell off, we could go ahead and move it. And then we move it, as we start to break down, you just continue to do that, right? Same thing. And if you guys noticed, this is the same thing I do on gold every night when we talk about our gold trade. Same exact stuff. Maybe, as I'm looking at this, maybe we could have been stopped out either, looks like maybe here. Like there's probably an argument to say that I got stopped out right there on this stop, right? That I probably got stopped out there, and would have missed, would have missed this entire move, right? But that's up to us as traders, right? It depends how tight are we going to have our stop loss. You guys see me do this on gold every single night. Do we have an aggressive stop loss? Do we have a more loose stop loss? Which one is more likely? Are we going to trail it off of what candlestick? And then, of course, we just completely sold off. And I think that is as good of an example as it gets, right? Now, any questions? I know there's a lot of questions that went through here. I'm giving a lot of stuff away in terms of like some of the really advanced and in-depth stuff that I do when I trade. And I know I get a lot of questions regarding this when I'm on TopstepTV and when I'm trading and doing other stuff. And you guys could see it takes time to go through this. It takes time to go through and talk about a tick chart and go through this and answer questions. So I can't answer these questions when I'm in the middle of TopstepTV or doing something. So that's why we're doing it now, right? We're able to take the time and answer these things. And I missed another trade on the NASDAQ. Look, same thing. NASDAQ, another trade setup just happened, right? Same exact trade idea. Over here on the 100 tick chart, just buy the dip. That would have happened again. It keeps work. It works until it doesn't, right? So now getting to questions, and then we will do some trading statistics. Oh, Hoag's in the chat again. Hey, Hoag, that 250 lot contract to short the NASDAQ stayed there all night, and they made some pretty good money. That was interesting to watch. It was 240 contracts, 250 contracts, and it stayed there all night on the NASDAQ. And when I seen you come in the chat, Hoag, it reminded me of that. And that order stayed at 939 all night. 939. So it was right there all night. So it'd be interesting if they held it through that craziness. If they did, they must have known something we didn't. To hold something I haven't seen before, such a big contract to short. And it just so happens today was a pullback day. Like it was an ugly day. We sold off almost 400 points. Oh, I was going to say, is it exactly 400 points exactly? No, it's pretty dang close. Pretty dang close to 400 points. So, yeah, something must have been correlated, maybe put on a tinfoil hat between somebody who, yeah, they know. How do they know? Was that you, Ho? Yes, somebody knew something somewhere, all the conspiracy theories, who knows. But the next time you see an order like that, maybe we could watch it again, and there is something to be said about that. I tried to place the short. Remember, we had that short slow markets trade idea. Was basically short from the same area. Got stopped out though on this huge run to 20,000 that we made during the London session, the pre-market, and then we just dumped it. So interesting day. Now, as we're going through tonight, the trade setup that I do see, and let's talk about slow markets trades. Now remember, post the risk disclosure all the time here in the YouTube chat, but I do see something that we could talk about and we could play on tonight is going to be a long crude oil. Now, as always, risk disclosure, this is not a signals class, but if you'd like, you could always follow along in a demo account. Like I always say, practice makes perfect. We're getting used to the tools, getting used to practice and trade and hold trades overnight, and getting used to the mechanics and the mechanism of doing this. So that being said, over here on the hourly chart, we've had a beautiful bearish move all the way back from, basically $84.50 a barrel. We've sold off. We've seen that huge rally off this level, at the basically the beginning of August. We've rallied from 71 all the way up to $80 a barrel. Well, we are here again. We, barely went below that. So you can see where we had the start of the rally where we just barely went below that and we started to bounce. So that being said, we did bounce right back up above $73 a barrel. And sure enough, this was support. It's becoming support again. And the way that I'm looking at it is, where do we buy it, right? How can we buy this? And remember, this is just an example. There's two ways. And maybe you guys feel free to do however you'd like in a demo account. The first way is more probable. So the odds of this one working out are greater. And that would be using a buy stop. So if we go right here and we click buy stop, and this is saying, I will enter into a long once gold or crude oil gets to my price, 73.54. It will trigger me into a long, and then I'll be looking for some price targets right around, say 74.80, 74.80, maybe even a little bit shallower than that, 74.64 as an example. And my stop loss looks pretty dang attractive right around either 72.76, below this recent pivot, or even below this one. This is stretches out your risk reward. This looks like a nice 1-to-1 risk reward. If you want a better, obviously you'll tighten up your stop loss to that pivot. It decreases the odds, but increases your risk reward. So this is the first idea that I have and that I'm thinking of going into tonight. Now remember, not a signals class, just for education. The other one that I like more is going to be a buy limit with a much greater risk reward, but a little bit less probable, and it might not even trigger. If we do rally, we have a greater chance of just missing, because if crude oil just rallies, I would miss it because I'm trying to buy for a liquidity run. What I'm liking is if we do start to sell off, maybe we take a peek back below and we run some stops. So I would like a buy limit. Say we're going to do some round numbers, 72.75, say a buy limit right at 72.75. That would give me a great area to have a stop loss at, say, 72.32. And I'll zoom in and we'll get a little bit more accurate. So bear with me. Say we'll do a sell stop. I'm going to just mark these out. Say a sell stop at 72. We'll do 35. And then if the take profit is going to be, this gives us room to even have a little bit shorter take profit. And then maybe we even have two take profits, right? Maybe we could even as Hoke said, if only we had a runner. that's always the case. So maybe we have an example that we could have, two take profits, or even leaving a runner on. We'll see. Let's just leave it out for this longer one instead. This to me looks like actually a really good risk reward. Let's do 55. I'm actually liking 35. 35. There you go. 35. So nice round numbers ending with 5, so we could do the calculations a lot better. So for this example, what we would want crude oil to do is, sell off, run some stops, and then find support down here, and then start to rally, come up and hit 74.35. The odds of this happening are less than 50%. It's unlikely because we're getting in as the market's going against us, and we're looking for us to turn around, and we have a really, really high risk reward. We're risking, this almost looks like a 4-to-1 to me. Let's do the math. Let's do some public math. It's always evening. doing math on my calculator is always more accurate than trying to rely on just brain power. So 75 minus 35, risking 40 ticks. So the risk is 40 ticks. So we'll just go ahead and do 40 ticks of risk and then the profit is going to be minus 22, $1.60, 160 ticks. So we're going to go 160 is exactly a 4-to-1 risk reward, right? Exactly a 4-to-1 risk reward. Interesting how it works out like that, making this nice and clear for everybody to see it. And yeah, there we go. So, and yeah, whatever. You guys get the point. I don't want to go through here. And so there's the risk and there is the reward. And now the question now is how big of a position size could we have, right? How big of a position size could we have based off of this scenario? Well, this is minis. And if this is a minis, we would be risking $40 to make $160. No. $400 to make $1,600. So we'd be risking $400 to make $1,600. And like I said, I like to risk between $300 to $400. That is right there. That makes sense to me. It's right around where I like to risk. If your risk is a little bit shorter, then you just go ahead and switch this from minis to micros, MCL, and then you could change your position size. If you want half this risk, then you'll jump over to micros and do this exact same thing, but you do it in 5 micros. Now, if I want to risk 400, this is 400 to make 1,600. Go over here into the settings. We go through, my risk is going to be $400. My profit is going to be 1,600. Go ahead and put the brackets, click on save, and we'll go back to this chart. Go ahead and clear this out. Make sure I place the order 72.75 just to be safe. And we are going to leave this one running overnight. So there it is. Feel free to follow along. Win a demo account, not a signals class. This is not a trade recommendation whatsoever. Put the risk disclosure in the YouTube chat, just purely for practice. This is a slow markets trade. This is the way I like to trade, either using a limit order or that buy stop to catch the breakout. Now remember, this will only trade if we go down and touch it. If we rally, then you miss it. If you're doing a buy stop, then you get in as we break out. And then you miss it if we start to sell. This is not e-signals. Now, that being said, let's go ahead and review some trader statistics. In the YouTube chat, I pinned it to the top of the channel, is my channel in the Topstep Discord. Feel free to share me your statistics. By doing so, you click on Performance Statistics, you click on Share, you copy that link, and then you just share it into that link that I have shared into the YouTube chat. And then we'll, as I'm going through this, answer some questions and go from there. Also, let's do a poll. I'm going to do a poll. I'm going to start a poll, and here's the question. Are you liking the statistics review? Yes or no? And then give me your feedback. I'm curious. Because I see how sometimes traders will come and join the slow markets at the beginning. They watch the analysis. They'll watch me trade gold. They'll answer some questions. And then we start to die off near the end of class. So my goal is to find a way to provide the value so that we continue to increase and traders stay through the end of this class. Now, remember, it's slow markets. You guys get exclusive stuff anyway. And I try and give the exclusive stuff. And so the more you guys could give me as suggestions, the better I can give you, like, have this class, right? So anyway, just going through some of this. Let's take a look at these first trader statistics that I am seeing. Let's take a look here. Now remember, two things when I review your statistics, okay? The time that you've been in the account, how many trading days you have, right? And the type of account. Most likely I would be reviewing an Express funded account more likely than I would be reviewing a combine. And somebody who's been in a trading account for 3 months, I'm most likely to review than somebody who's been there for 2 days. Now, I see a beautiful equity curve coming in. Take a look at this one. This trader has had this Express funded account since May. Look at this. And I think this is something where we could learn a lot from. This trader, this is an Express funded account, so you can receive a payout in the Express funded account. A lot of time. I love to see traders who have been trading for a while in a funded account, and you're not just risking it, blowing it, or yeah, you guys understand it. I talk about it every single night. As we scroll down, P&L, $4,500. $4,500 is still great over this period of time. 3 months, $4,500, just over $1,000 a month by trading. You guys hear Mick and the risk team and, anybody who is talking on TopstepTV says the same thing over and over again. Just the break even is kind of successful, right? Like if you're in an Express funded account or even a live account and you're breaking even for the year, I would consider that a win, right? A very, very small percentage of traders are doing really well in the live market environment, especially the way the markets have been recently. So that is a very positive note. And given there's a lot of statistics, so these are going to be some very solid stats, and it's not going to change very much, right? Tomorrow, if you have a winning day or losing days, it's not going to affect your statistics. It's a big sample size, and that is very good. So when you're analyzing statistics, the more sample size you have, the better off and the more true that you could analyze, the more data you get, right? So 65%, really good. This is a negative thing, right? This is an upside down risk reward. It looks like you're risking $1.85 to make $1.15. You still have a positive profit factor, and it looks like you started doing really well at the beginning of your XFA, right? So really good day to start off. Maybe another great day. It looks like you ran this account up all the way up to almost 7,000, and since then it's kind of started to been tough, right? Tough trading. Looks like you went a period of time and not trading it, struggling. But let's look at this. This is the point. Traders who are either struggling, wants me to review their statistics, that is the point. That's what I want to do, to help traders who need help. And if you're able to get anything from this, I'm ecstatic. If this helps you in any way, I'm super excited. Average trade duration, that's great. Keep it up there. Looks like about 400 trades in like 3 months. That is good. It looks like you're not over trading. About the same in the number of lots. It doesn't look like you're scaling in too big. You're not trading too big, maybe based off of that. Looking at your best trade was just 2 contracts, gold short, 2 minis. Your worst trade, 2 contracts, micros. That makes sense. We had a high volatile time, and that looks like when you went to micros. So I do like that you switched to micros. There's a equity curve. It's a good equity curve. You're not seeing this huge sell-off or this blowing your account. Okay, now this is where I think you might be struggling immediately. It looks like you're letting your losing days just hit that 1,000 mark. Now that I'm looking at this, right? Every single one of your losing days, you're just letting it hit 1,000, right? 1,000, 1,000, 1,000, 1,000. So maybe tightening, making that tighter, right? Instead of losing 1,000, maybe you tighten that to 500. I'm just a suggestion, right? This is an interesting bell curve, right? It looks like the majority of your winning trades is less than 2 minutes. And then as a trade gets longer than 2 minutes, it's just losing, right? Loss. The longer you let a trade, the higher the percentage that it's a loser. So you'd think that should be the opposite. I I don't like to see that. That makes sense now why you have a higher trade win percentage and then you have an opposite risk reward, because you're just trying to hold trades and hoping that they come back in your favor. I that is a struggle. So that's something to pay attention to. Cutting your winners really, really quick, under 2 minutes, right? 38 of them under 15 seconds, 46 of them between 15 and 45 seconds. So, maybe a time stop. There's a suggestion in the chat. Time stop. That would be interesting. I don't use one. Maybe that could be an option, right? Where you could say, if this trade lasts longer than 2 minutes, you cut it short. I don't know. That there could be something to that. You could tell. It's pretty obvious, right? Coach Jay, I wonder how many of those long hold times were in profit at one point. Yeah, that would be an interesting thing to see, is maybe where it shows trades that were in positive that turned negative. I'm sure you could go through and do analysis yourself, and you probably know the trader. If this is your statistics, you probably know better than anybody else if you're letting your trades run, from positive and then go against you. So you could see the start of your combine, it looked like this XFA went really good. You started to make money. You had a $1,000 loss, which has been your $1,000 loss. This was your most active month, was June. Not too bad. I mean, it looks like it was off and on month, a lot more positive days than negative. But that's the thing, right? Your negative day makes up for, maybe 2 of your positive days. It looks like you did have a couple where you were doing the same, but then maybe it was fear, maybe it was emotion. Sometimes I see this where traders kind of just stop at the $200 a day mark, but then they let their losing days get to negative 1,000. So one losing day will wipe out, 3 winning days. And that's a psychological thing. Sometimes you just like, hey, I made my $200 a day, I'm done, right? Well, if you're going to do that, you also need to understand, why would you let your negative day get all the way down to 1,000? If you're going to stop when you're up 200, why are you not stopping when you're only down, say, 200? It looks like you were doing really well here, right, this week. Negative 1,000, positive 1,000, negative 1,000, positive 1,000. Your winning days were equal to your losing days. But then maybe it was emotions. I'm not sure. I do like you don't have a lot of trading days or trades, right? 2 trades, 9, 13, 8, 17. So you're not going crazy with the trades, right? I like seeing that more selective. This is in June. July, more same thing. Maybe it's emotions again. If I'm guessing, I see that you're not trading every single day of the month. Who knows what that would be for them? You're not trading on Fridays, taking some break, which is good. This can be a good thing. You do not have to trade. Trading is optional. Yeah, it's going to be interesting to see. Same thing. Look, one losing day just wiped out 3 winning days. Same thing. Looks like you're just cutting off at $200. Maybe you're focused on getting a payout, right? Yeah, you're not letting the winning days get over very big anymore. So I'm not sure what that is. Maybe it's a psychological thing for sure. Yeah, because you're just focusing on getting a payout, right? All I want to get is $200 so I could get a payout. $200 to get a payout. If you trade your system and if you trade what brought you into this account, then a payout will occur naturally. So let me make sure I state that again. So if you focus on your process over profits, if you focus on your process and you just trade normally, then the payouts will occur naturally. I hope that makes sense. I'm going to repeat that again because it sounded really good and I like it. If you trade normally, then the payouts will come naturally. So, and that holds true. If you're trading just to get a payout, then you're trading for money. You're trading for an emotional thing, right? But if you're trading your process, if you're trading your strategy, then the results will speak for themselves. And so I'm curious to see, was you trading your strategy at the beginning, right, where you had, a really good equity curve, right? You started doing really well. Was you trading your strategy, and then once you started to lose money, you started trading just to take a payout? I don't know. But that's what I'm kind of seeing a little bit. I do like that you switched to micros to finish it off. And so maybe you're out of the system. This has been a very tough market, and switching to micros is always a positive thing to see over the past month. Well, okay. Well, I think that was a good one. Sorry I didn't get to more. I'll continue to try and get to more statistics. Now, remember, always share your statistics here every single evening during slow markets. If you guys haven't caught it, Coach Jay's doing an amazing job. I love to have him. I love that he was on last night. He's doing At the Buzzer. It's been great. I've been enjoying watching it. This upcoming Sunday, of course, you have Nick for the Tick. That's always going to be great to kick off the week with him, myself, and then, of course, D during the London session. And, I seen that comment, Coach Jay. I think there's going to be a MAE, MFE that is on the roadmap. So that being said, you can actually go over here to this Trader Hub. And no, it's not. It's this question mark, right? Yeah, this question mark over here on the left-hand side of Topstep X, and you can see what is planned, those features. Look, right there, improvements to performance stats page. It looks like it's had 1,000, any improvements. I like that. And you go through and upvote this. You could go and read it. You could have conversations in this. Look at that. So if there's anything that you like to see, maybe you go through here, you could like it up. It looks like, bracket orders. I really like that one. And then you got a roadmap, and this roadmap, you guys could see it as well, in review, planned, in progress, and some of the stuff that have been finished. So, love this. Take advantage of it. Everybody in here, I've started to really, really love Topstep X. It's built by traders for traders. It's built by us, right? We're the community who builds this platform together by voting stuff up and getting it passed. So I am going to leave it at that, guys, and I will see you bright and early Friday morning. If not, I'll talk to you then. So see you guys. Take care. Bye.